Alright, what is going on, guys? Hope you guys are having the best day of your entire life. Today, to be honest, I didn't want to make this video. I'll tell you why. I didn't want to make this video for a couple of reasons. Right, first things first, I made about 30,000 AUD, which is like not a lot, but still a lot, 20,000 US dollars in a day. Now, the reason why I didn't want to make this video today was because I feel like what happens after a while is people see these gains and they always go straight away, oh, it has to be paper trading account, or it has to be this. Like, yeah, initially you do not care. Like, I don't care, but it's just like, you know, you get some hate somehow for making money on the internet. I didn't want to make this video, but I'm like, you know what, there's some trades that I took which pretty much definitely going to be very beneficial for you, and this all happened in like, I think, hour and a half of trading, which is like 90 minutes for 20 grand, which is pretty good money. So, and the other reason why I didn't want to make this money, because I made too much money today, man. I would just want to go chill, relax, and not worry about 30-minute long recording of a video. But I was just doing my journaling on the trades, and I was like, oh my god, okay, this is really cool trades. And I was like, you know what, I'll just make a video. It'll help, even if it helps 1 or 2% people. Like, if this video gets 1,000 views, right, 1% of the people is like 10 people. Even if it helps 10 people or 20 people make a little bit of money, I'm happy. Like, the mission of this channel, the reason why this channel exists, is like we making it happen. You see what I'm saying? So welcome to the channel again. Today we're gonna go over how I made $20,000 in one day. If you don't know me, my name is Sumesh. I'm a full-time day trader. I'm based in Australia, but I trade American markets and make America great again. No, actually, make day trading I don't know how it goes. Make America great again. Who's that? Yeah, I don't know. Anyway, let's see what we have here. And we have some trades that I took. 5 trades actually. Tesla, QQQs, Meta, SPY, and QQQs. Again, insane amount of profits. Like, insane amount of profit. This is insane. I'll break it down very nicely. Yeah, now, first things first. I do want to break down. I made 20,000. My position size was like not heavy. It was just the gains were big. Tesla, I doubled my money. QQQs, 200%. That means if my position size is 1,000, I made $2,000 profit. Profit, right? Meta, 10% roughly. SPY, 70%. QQQs again, which is 50% gains, which is, I'm happy. I'm happy. Can you tell? Alright, so let's go over the first trade that I took, which was Tesla. Why I entered Tesla, why was I watching it at first place, this Tesla? So I decided to short Tesla in the pre-market, right? I was like, oh my god, this looks very good for the downside. But I realized that market already made a big move down. Like, I want to just look at this for a minute. We closed at 178 yesterday. We went all the way down to nearly 170.5. You know how big of a move that is? That's a $7.50 move just after hours. That's massive. And now this strategy that I'm going to break down for you, it's called, it's literally, I call it sucker's strategy. Okay, sucker strategy simply means, look, stock market is a zero-sum game. Some people make money, some people lose money. If you lose $100, somebody made that $100 from you. That's how this game works. Now, in order for us to make money, somebody has to lose money, right? On the other side of the world, this dude sitting who doesn't know what he's doing, he has to lose money for me to make money. This is the game that we are playing, right? So I was like, okay, I had this marked on the charts. One thing that the beginner traders or a lot of people make mistakes with is pre-market low break and they buy puts straight away, or they short the stock straight away, right? They jump in straight away. Now, think about it for a minute. If you go short right here, right, I want to pay it. This is very, very important, All right, nobody's gonna break down that easy how easy you're gonna make it. If you go short here, that means if the price goes below this and you go short, where would you, as a trader, where would you put your stop loss? You put a stop loss right here above this level, or you'll put a stop loss a little bit, probably let's say once above 171. That'll be a stop loss. But what happens when everybody's short selling? What is short selling, by the way? So you can buy stocks, and if the stock goes up, you can make money. You can do the exact opposite, which is called shorting, right? Where you sell the stock first and then you buy. Basically, you just press the other button. That's it. That's how easy it is, all right, to understand. You just press the sell button first, then you buy buy later. Now, when you buy shares to close your position, what do you need to do? You need to sell. But when you sell first to close the position, what do you need to do? You need to buy. Think about this, is very, very important. That means these people who enter short here, their stop loss is sitting right here, and stop loss is a buy order. So that means they are buying. The order is coming into the market to become a buy order into the market. Okay, this is clear. And when the order comes in as a buy order, what happens? Stocks shoot up straight away. Why? Because everybody starts buying at the same time. Everybody's stop losses are getting triggered. Everybody's jumping out, and everybody's short selling, sold, like they were short before. Now they need to close. To close, they need to buy back their shares, and the prices push higher. Very important, right? Now, where does the sucker strategy kind of kicks in? Which is pre-market break. The moment pre-market low breaks, they jump in straight away shots. They jump in puts. Someone like me who already know that we made a big move in the pre-market. I was like, we made a big move in the pre-market. Like, they're gonna be people. Think about this. If you shorted right here and you already up $7 per share, right? And you shorted, let's say 1,000 shares, you up $7,000 just overnight. You got paid to sleep. What's the first thing that you're gonna do as soon as the market opens? You're going to get out. You're gonna sell, right? Now, to sell, these people, when they need to sell, like, or to close a position, what do they need to do? They need to buy the shares back, all right? And they can't just buy the shares back in the middle of anywhere. They need to look for the area where a lot of people will sell them, like their shares, so they can buy the shares. Very, very important. So that means if other people are shorting, which means they're selling first, right? Who they're selling to? They're selling to the buyers. Who's the buyers? They're closing their trade. They're the buyers. Does it make sense? If you're confused, don't stress. We'll get to it, all right? Now, the moment pre-market low breaks, a lot of volume kicks in. A lot of people start shorting. These people who shorted even earlier, now they're closing their positions. They're like, boom, I got liquidity that I needed. Other people started buying, right? Because think about it. If you need to buy 1,000 iPhones, there gotta be 1,000 people willing to sell you the iPhones. And you shorted right here, and now people need to buy the shares back from you. Buy those iPhones from you, right? Now, all these people are selling you the iPhones, and you're buying all the iPhones because you shorted already, and now the profit. Now, what can happen? Prices can push. So I was watching. This strategy is called sucker strategy. When we gap down heavy, always watch sucker strategy, right? We gap down the moment, I was like, the moment it breaks below this particular level, don't just go long straight away. The moment it breaks below, let it reclaim the pre-market low. So you can put your stop loss just below low of the day. That's it. That's how simple it is. So you can put stop loss right below low of the day, and it reclaims, you can go long. Where would be the profit target? The profit target can literally be like, you can sell at the next hourly levels. For me, these were the next hourly levels that I would have sold at, right? And also, yeah, let's see how this trade went. So the first 2-minute candle, we went down straight away. A lot of people started selling. What did I do? I started going long here. I started buying calls here, right? I started buying calls here. I'm like, this looks so good. I started buying calls. What happened? My first profit target's this. Hit my profit target. I sold. So let's say if I did 40 puts, like 40 calls, that means 40 contracts. I will sell 20. I'll sell half. Like, I'm happy with my 20% profits, 30% profits, right? I'm happy. My other half, let's say, for example, if I did these 40 puts at, $1 each, which is $100 each, right? I got out of 20 at 130. My stop loss on the 20 contracts that I still have is going to be break even at 100. I call this negative risk management. So negative risk management is literally as simple as it sounds. You sell, you're already in profit. Now the worst case scenario is break even. You get out at the break even. So I was like, okay, I'll get out break even. What I got to lose? I'll hold. Nothing. I haven't got nothing to lose. Break even never hit. Boom, 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 boom. And this is literally how it went. Look at this. And I held this because I had nothing to lose. I held this. I took some profits the moment I hit this, and I took some profits the moment I hit 175. That was my day on Tesla. The reason why I entered. Does it make sense? This strategy makes sense? All right. Let me know in the comments down below. Let me know, say sucker strategy, or say something about the sucker strategy. Let me know, what did you learn about this sucker strategy? This is very profitable strategy, by the way. All right. I teach this to my students. This is one of the most profitable strategies. All right. I'm just giving it out to you for free because I fucking love you. All right. And this is Tesla. And this is only one trade. And this trade ended up to be 100% trade. It went. It literally went. Look at this, how this trade went. It made a huge move, right? It was a 100% trade. That means if you would have put $1,000 into this trade, you would have made $1,000 profit on top of this. All right, beautiful, insane trade, very nice trade. All right, now let's look at the next trade that I took, which was QQQs. Now QQQ's trade was beautiful trade again, and this trade was, I was going long on this particular trade. Okay, now I'm gonna keep it, you know how I am. I keep things super simple. Right, this is where I checked QQQs. This was my 1 hour level. Okay, this was 1 hour level. 1 hour level means level drawn on a 60-minute chart. All right. This is a 1 hour level, and I freaking loved it. I was like, oh my God, this looks so good. Why? The reason why is we have a low, then we have a high low. Now we are making kind of a new high low, while we have a high and new high, and we can make a new higher high. Like, this is how the trend moves, right? This is how the trend goes. So I'm like, okay, the trend is sweet. Let's see if we can make a bigger move. But at the same time, I, as a trader, like to wait for a little pullback, right? Hourly level broke, and I'm on a 2-minute chart. And also take a note of this. I absolutely love 2-minute chart for first 30 minutes of the market open, which means from 9:30 Eastern time to 10 o'clock Eastern time, I love 2-minute chart. Okay, then 5-minute chart for next 60 minutes, which means 10 o'clock to 11 o'clock is the 5-minute chart. Then 10-minute chart for next, literally rest of the day. All right, from 11 a.m. Eastern time, which is New York time, for rest of the day. All right, this is what I love. So as you can see, I was on a 2-minute chart while I was trading this, right? And what I saw was there was a flag pattern setting up right at the top, right here. And I absolutely love it. I'm like, okay, there's a flag. That's cool. Let's see now if this flag can break. On the next candle, I was looking at it. Also, I want to point out the volume. The green candles have so much more volume compared to this red candle that we saw. The volume significantly dropped. Does it make sense? Like, the volume's so low. So I was like, all right, that looks cool. Now, if the next green candle has more volume than this red candle, I will be in the trade. But this looks so right. And also, at the same time, if you zoom out a little bit, I had a trend line running at the top. Which was roughly around this 441. I was sitting here. I was like, okay, I'm not gonna lie, keeping it real, I was sitting here, I was not even thinking about that. I just wanted to look cool. I was thinking like probably we can head to 439, 440. That's what I was thinking in my brain that we will do. Right? I was like, okay, this looks cool. The trend is there. You know, it might head up to 440-ish level. It might be nice. And I was watching this flag. I will enter the moment it breaks out of this flag. Right? Yes. The next candle, try to break. Now, the question would be, but Sumesh, you would have entered here. Where would you put your stop loss though? For me, man, I am one of those traders who like things very, very simple. If I'm entering at a break of a flag, my stop loss is just below this particular candle, the red pullback candle. Profit target's this. That's simple. If I'm entering a break of a flag, like in this case, my profit target's the next level. My stop loss is just below this particular candle. The most recent red candle that we have had, my stop loss just goes below it. That's it. All right. Now, what happened? This is only for flags, by the way. All right. What happened? I'm risking about 28 cents to potentially make 67 cents, which is like I'm risking $1 to make $2.50 back, which is pretty good. And I was in a trade. This is how this trade went. Now, 10 o'clock about to hit. I'm in the trade. I'm in very nice profits. 10 o'clock hit. What do I do at 10 o'clock? I just explained before. I jump on a 5-minute chart. I jumped on a 5-minute chart, right? Like I said, 5-minute charts is where I make money. And it went to 440. Oh my goodness, this is insane. Again, what did I do? Took half my position size off. My other half went break even. If just in case this went down, I will get stopped out at the break even of those particular contracts, while I still get to keep the profits of my first half of the position size. Think about this for a minute. Think about it for a minute, right? This was my position size, right? This is my position size. Half I took off and I put in my pocket already. I already pocketed it. My other half is out there acting as a soldier, trying to fight to get to more money, right? I already pocketed the profits from one trade, and I'm kind of treating the same trade as two different trades and letting it run with zero risk, which is negative risk management, right? I have nothing to lose. But at this stage, we haven't had any pullbacks on QQQs at all. Like, we haven't had any red candles on a 5-minute chart, all green candles. And 440 was approaching. So I was like, okay, I'll take some profits. Let my runners run at the break-even stop loss. It started pulling back a little bit. That's cool. Nothing to worry about. And then it picked up again. I took a little bit more off. At this level. And this right here, you might be like, yeah, you just saying it. I would not make this video if I was just saying it. You know what I mean? Around this white line where we were heading to this. There was a trend line running on the top. I can show you the trend line that was running on the top, which I was watching. This was a trend line that I was watching. Even if you go and check my weekly YouTube video that I made, you can see this trend line even on that. Literally, you can see the trend line that I was talking about, the weekly video that I made on Sunday. So I was like, okay, sweet. Now, I don't want to say that I exited the moment it touched this. No, I didn't. I took some profits. Right, but then when I started rejecting, I jumped out. I was like, okay, sweet, I made too much money. It's 200% return. Just to give you a little context, if you jump in $100 position size, $1,000 position size, I made 1,000 plus another 1,000, like my 1,000 back. Yes, 1,000 plus 1,000 plus that. Basically, I mean, I turned 1,000 to 3,000, so I made $2,000 profits from just $1,000 position size, which is, I would say, pretty insane, right? Yes, it was. And this is only 2 trades in, and I'm giving you the sauce. And if you are loving what I do, all right, and you want to learn more, learn the systems, the frameworks, the glitches, the loopholes, the things that I know about trading that you might benefit from in the real time, check the link in the description. It will be the first link. Fill out the application because I'm starting a small case study group. I'm going to literally take some day traders, teach them how I day trade, and get them to the next level. All right. If that's you, or if you want to be the next, first link in the description below. Check it out. All right, let's get to the third trade now. Meta. I love making these videos, man. Just the happy. I get to flex about my skill. That's why I like it so much. Not gonna lie, I get to flex about my skill that I did this, and I do this everyday live. Like you know, somebody who doesn't trade live can bullshit all the time, but I do this live with my Discord. They can see it. Hey, if you're from a Discord, or if you're a KCU member already, let them know in the comments that you watched me print money live. Let me know in the comments. All right, let everybody know. Let's go. Now, the third trade was Meta. Again, this Meta trade was around 950-ish. So we'll have to go back on a 2-minute chart again. Right. Now, let's go and break down candle by candle again. Okay. What happened on Meta? Big push. Big push. Now we're having a little pullback. I mean, think about it. We went from 463 all the way up to 473. That's a $10 move. I did a very small position size on this. Insanely. I only did 5 contracts. I think my position size was like $1,800, which is nothing for me. My normal position size is like 10,000, 5,000, 8,000, 10,000, right? I was like, the reason why I didn't do size, even though this trade worked insanely, it worked really good, it was just the volume. The volume of the red candles is a little too much for me. Even though this was setting up nicely, I want to say this, even though this was setting up nicely, we were making a very nice move, and it was bouncing off the EMAs and stuff. It was bouncing off the ATMA, and it was bouncing off this kind of 470 level, which is a confluence. Confluence is when there's more than one reason for you to jump in, like ATMA bounce plus 470 bounce. All cool, sweet, done, nice, right? But at the same time, the volume on these red candles was a little bit too much for me to jump in big position size, if that makes sense. So what did I do? Even though I could have made a lot of money on this trade, because this trade went, I calmed down with my position size because I didn't want to risk too much, right? Just in case if it dumped. Because you gotta understand, at the same time I was in Tesla calls, at the same time I was in QQQ's calls, and I was doing this Meta calls. I was like, that Tesla and QQQ's, they're like the 5-star setup. And this Meta is not looking the best. I don't need to do, because I'm already up nicely on those trades. I don't need to have my mental capital stuck in a low quality setup. Think about it. You only have so much brain power in a day. You don't want your brain power stuck in a trade where you have to babysit a trade because you cannot do nothing. That trade that I took on Tesla and the trade that I took on QQQs, I'm not babysitting them. I know they're very nicely trending. They will move. I just didn't want to babysit a trade, so what I do? I did small position size, only did 5 contracts, just in case, just because of the volume. Which is another lesson for you. I'm making sure that you're taking notes. Which is another lesson for you. The lesson here is, do not jump in big position sizes, even on the trades that you do not like. I did not like this trade, but I kind of liked it to a point where I don't want to ignore it, but I don't like it to a point where I just want to jump in big position size. I hope you understand what I'm trying to say, right? So what happened here? It worked about 10% because I was in like small position size, wasn't a heavy position size. I didn't really care. At one stage, I think I was up like 20% on this trade, but again, you see what I'm saying? Again, it's not like I would have made a lot of money even if it went 30%, 40, 50%. I was only in like 1800 position size. It was like not a lot of feelings to this, so I just closed it. I'm like, I just closed it. I'm like, whatever, I don't care. And then I took the trade on SPY, which is my 4th trade on SPY on a 5-minute chart at around this level, 10-15-ish. Why? SPY was nicely trendy. It was so nicely trending upwards. We were making, like, literally, if you look at this is what the SPY looks like. SPY was making, this is the lows, this is the higher lows, and we started making a new higher low, And I'm sitting there, I'm like, oh my god, this looks really clean, because we need to make a new, because it's so strong that we might set up a nice bounce, right? We might set up a nice bounce. And I'm like, if it set up a nice bounce, there are big chances that this bounce might happen at the 80 MA moving average, right? If the bounce is going to happen, because it's strong, there are chances. And then I saw this wick at the bottom. Pretty insane. You ask me, it was pretty insane. I was like, okay, this looks really, really nice. Why? Because I can enter, and also it's kind of 516.5 is a critical level. I was like, okay, I can enter if this 516.5 breaks with a stop loss right here, which is not very wide. If you think about it, the stop loss is, we're roughly looking at, if I enter the break of 516.5 and my stop loss is right below this particular candle, I'm risking about what, 48 cents, or let's say 50 cents. But my next target was insane. My next target was roughly, first target was like 200 moving average, not gonna lie, which is still like 65 cents is a profit. The next one was roughly here, which is pretty insane. I'm risking about 50 cents to make $1.20, right? Pretty insane. So this was a trade. Boom. You really, really need to understand how the stocks move. Stocks love to move in a structure. This is how the stocks go up. And that's exactly what's happening. Boom, 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 boom. And I'm looking for the next boom towards the upside, right? And it went like this. Of course, what did I do with the 200 moving average? I sold half. What did I do with the other half? Set a stop loss at the break even. And this is how it went. Hit my profit target. I'm happy. I sold a little bit more. I'm still holding a little bit at this point. Then I sold everything the moment I started seeing that we are not actually holding the ATMA. We're not holding any important levels. I was like, you know what? I'm out. Insane amount of profits though. Still very good. I'm very happy. See what I'm saying? Now this is SPY trade. Then comes the last trade that I took, which was QQQs. I know these videos are a little bit long. If you're enjoying these videos, please let me know that you watched till the end. So just so I know that you watched all till the end, just comment the word, I don't know, just let me know in the comments. Why not? Why wouldn't you do that? Right? All right. Now the last trade that I took was, and also subscribe to the channel. It's a beautiful motivation for me because subscribers are growing. I'm like, oh my god, this is so cool. All right, now QQQs. I was already in a trade. You all know this, right? I was already in a QQQs trade at this point where I sold roughly around here. Yeah. But that doesn't mean I cannot take another trade. Like that was a trade that I entered earlier in the day. Makes sense? I was looking at this new trade to take towards the same levels at the upside. It's like, why can't I add more to the position that's already working? Think about this. People keep hunting for plays. Rather than hunting for plays, why not just trade the name that is already working? Why not just add more to that rather than hunting for more plays? I'm like, oh yeah, I should add more to this trade. This trade is really setting up nice. And we broke this very important level of 440.35. And it was also breaking this 200 simple moving average on the 5-minute chart, which is very nice. And I absolutely love 200 moving average. All right, go watch some of my more content. You will know why I love 200 moving average on a 5-minute chart. Any chart, be it. And I was like, okay, this looks cool. This candle is pretty cool. This candle, what does this candle suggest? This candle suggests some buyers came in the moment it retested this critical level. How does a retest work? It might end up bouncing. So I was like, okay, if it breaks this candle, previous candle's high, I'll go long. My stop loss can just be below this particular candle. Like, okay, I'll see how we go. I'm risking about 30 cents to make 40 cents. You might be like, that's not a lot. I know that's not a lot, but still better than, risking 30 cents to make 20 cents. It's still something better. And also, you could understand I was already up very nicely on QQQs. I was already like, oh my god, this looks so good. What happened? Boom. I hit my profit target. What did I do? Negative risk management again. Sold my half, my other half went break even. It hit my next profit target, which was a trend line. What did I do? Now all of a sudden this trade became risk 30 cents to make about 80 cents. This trade became even another beautiful trade, and this was like 50% returns, right? And hey, and I took this trade, I took some profits, and then it started again, what I explained in the previous trade, and then I exited the whole thing, right? But the point here that I want to make is you need structures, you need systems, you need to see the trend. One of the most important things that you will do as a trader is learn how to spot trend. Learn how to spot trend. It's the most important thing to do as a day trader. The most important thing. Learn how to spot the trend. Okay, there's some videos that I have made. Learn how to spot trend. Trend is higher highs, higher lows, this. Okay, then comes levels. Learn how to draw levels. These levels, learn how to draw them. All right, and then comes the proprietary patience candles. Look for candles that you think can make a big move. This is proprietary stuff. I teach this in KCU, but I just showed you what I do every single day. This is what I do every single day. This is how I make money. Make sure you subscribe to the channel, and there will be, I think on this side of the screen right now, there will be a course that I made. It's like an hour-and-a-half long course. Go watch this course, subscribe to the channel. Let me know in the comments down below if you enjoy this. And also, if you want to learn more from me, there's a link right above me right now that you can click and you can apply for K Capital University. And I'll see you later. Let me know in the comments if you enjoy this sort of content. All right, let's go.